Pump or Dump Bitcoin Gold BTG, an investor-facing deep dive you can read on camera or use as a long-form voiceover. Bitcoin Gold started as a hard fork of Bitcoin in late 2017 with a clear, repeatable pitch: restore mining decentralization by moving away from a SIC-dominated SHA-256 to an Equiotia-based proof of work so ordinary GPU owners could mine and participate in network security. The project set a 21 million supply cap like Bitcoin and promised a community-driven, more accessible alternative that could also explore usability and experimentation not possible on Bitcoin's main chain. That origin story still shapes how retail traders and speculators view BTG. Some see it as a principled, grassroots effort that corrects perceived centralization in mining. Others view it as a peripheral fork with limited adoption and recurring security worries, and that tension is the seed of both pump narratives and dump risks. Tokenomics matter. BTG mirrors Bitcoin's supply schedule with halvings that reduce miner issuance over time, which supporters argue creates scarcity dynamics similar to Bitcoin's. Critics point to low daily volume and small market cap, which make BTG much easier to move up or down with relatively modest capital flows, so scarcity rhetoric must be balanced against liquidity realities. Historically, BTG's launch and aftermath included controversy and real-world security incidents, notably 51% attacks in prior years that have dented exchange trust and user confidence. These events are not ancient footnotes but structural scars that influence how exchanges, custodians, and large holders treat the token today. On the surface, today's price, circulating supply, and rankings show BTG is a microcap crypto. It trades at low single-digit dollars per token, has millions in circulating supply, and daily volumes that are tiny compared with large-cap coins, a setup that enables sharp percentage moves but also makes sustainable rallies difficult without meaningful on-chain adoption, exchange relists, or a new narrative that draws fresh capital. So what creates a pump for BTG? Typical triggers include 1. Positive protocol-level news, roadmap updates, mainnet improvements, partnerships, or developer hires that are credible and time-stamped. 2. Exchange listings or relistings which increase accessibility and liquidity. 3. Macro crypto rallies that lift small caps as traders hunt for double or triple-digit returns. 4. Coordinated social media hype or influencers spotlighting BTG. And 5. Sudden on-chain activity like a large token move from cold storage into an exchange wallet. Any one of these can cause a short-term spike, often amplified by low volume, leverage on small exchanges, or FOMO-driven retail buying. Conversely, what causes a dump? Common drivers are a security scares or news of another double spend 51% attack, B. Delisting threats from major exchanges or actual delistings. C. Large holders selling into rallies, the classic sell the news events. D. The broader market entering a risk-off phase where small caps are sold first. And E. Regulatory statements or enforcement actions that target projects perceived as vulnerable or poorly governed. Because BTG has been delisted in the past by some venues and has a history of attacks, those risks are salient and price-sensitive, meaning rumor alone can trigger outsized moves and liquidity crunches. For investors and creators preparing a video script or audience-facing content, frame BTG not as a simple buy or sell but as a case study in how small-cap crypto narratives form and burst. It's a coin with a principled tech origin, a long history, and active but thin markets, the exact recipe that leads to headline-grabbing pumps and equally dramatic dumps. If you're building an investment thesis, separate it into two parts: fundamental long-term and tactical short-term. For fundamentals, evaluate development activity, GitHub commits, clear roadmap milestones, real developer hires, real user adoption, wallets holding, on-chain transaction counts, active addresses, exchange support, which fiat major exchanges list BTG and how reliable those listings are, and governance transparency, who controls development funds, are there multi-sig wallets, public financials. If these fundamentals are weak or opaque, treat any price rally as speculative mania rather than a durable revaluation. For tactical trades, momentum plays, scalps, and swing trades, prioritize liquidity and exit planning. Set strict position size limits, because microcap cryptos can go to zero quickly. Cap exposure to an amount you can afford to lose entirely. Use limit orders to avoid slippage in thin markets, and prefer order books on more reputable exchanges when possible. If a pump begins, predefine a tiered sell plan e.g. Take 30–50% off at first major resistance, scale out of the position on subsequent green candles, and trail stops to capture momentum while protecting gains. Likewise, if you're shorting, know that short squeezes can be brutal in low liquidity coins, and borrowing cost liquidity for margin can be crippling or unavailable. On the psychology and social mechanics, pumps often begin with a story: BTG is relisting on X, new partnership announced, or devs released a bridge, and social channels amplify partial truths into full-blown narratives. Always ask, who benefits from the narrative? If a single large holder or small group will materially benefit from a spike because they hold concentrated supply, treat the event with skepticism. Conversely, genuine, verifiable development milestones, code releases, verifiable audits, audited treasury movements are stronger signals but still require scrutiny. Don't assume correlation is causation. A price rise during a Bitcoin bull market does not mean BTG's protocol improvements caused the rise. For longer-term investors drawn to BTG's mission of decentralized GPU mining, consider these decision frameworks. One-time horizon: are you buying to hold for the potential slow march of adoption, or speculating on a fast cycle? To conviction: do you understand the tech differences and trust the team and community? 3. Portfolio fit: does adding a tiny alcan meaningfully diversify risk, or simply concentrate speculative exposure? If you choose to allocate a small starter position as a long-term moonshot, keep it tiny, perhaps 0.52% of a high-risk allocation, and rebalance if the way grows after a pump. From a compliance and safety lens, remember BTG's history of 51% attacks and exchange delistings. That history increases counterparty risk and explains why institutional players are largely absent. Mainstream custodians are cautious. That reality should shape your custody plan. Prefer hardware wallet self-custody when practical. Use exchanges with strong security track records for active trading only, and avoid leaving significant sums on small centralized venues. On due diligence, do at least the following checklist before deploying capital: verify latest GitHub activity and release notes, confirm recent leadership or dev hires via primary sources, check that major wallets or funds haven't dumped large holdings, verify exchange listings and withdrawal histories from those exchanges, and seek independent audit reports for any new code bridges, smart contracts, or features. When examining on-chain signals, watch exchange inflows. A sudden, sustained transfer of BTG to exchange addresses often precedes price drops as sellers move to realize gains. Conversely, withdrawals to cold wallets can indicate accumulation and may be bullish if substantial and sustained. Scenario planning helps convert uncertainty into action. Imagine a 3-month bull scenario where BTC rallies and small caps follow. In that case, BTG could spike quickly and offer multi-bagger percentage returns, but the probability of a retracement is high. Imagine a security scare scenario. In 24–72 hours the price can crash 50% or more. Imagine a slow burn fundamental recovery where sustained dev progress and renewed exchange support gradually raise market confidence over many months. This path is rare but best for patient, research-driven investors. Finally, practical recommendations for user-prexers: clarify that BTG is not an established blue-chip crypto, highlight historical hacks and delistings as cautionary markers, recommend tiny position sizes if speculating, and emphasize exit plans over hope. Provide concrete steps, monitor official project channels for verifiable news, set price alerts at pre-defined points, use limit orders to manage slippage, and consider profit-taking rules before entering trades. Close with a reminder that crypto markets reward discipline, not blind optimism. Microcap tokens like BTG can make headlines with explosive moves, but those moves are often asymmetric. Huge upside potential paired with a legitimate path to near total loss. Always do your own research, verify claims against primary sources, and never invest more than you can afford to lose. Not financial advice, informational script only.